Good evening, ladies and gentlemen. We welcome you to the UPL Capital Market Day. As you are aware, this is an annual event where we share with you the Q4 results as well as the full year results. Let me start by introducing. We have in front of me in the front row our Board of Directors, our Chairman, Mr. Raju Shroff, Mr. Hardeep Singh, Dr. Reena Ramchandran, Mr. Jai Shroff. Let me also introduce you to the panel who will be sharing the dais with me. They will be presenting the performance and we'll have a Q&A session after the presentation. So broadly, Mr. Sagar Kaushik and myself will share the financial results and the performance for this year. After that, Mr. Jai Shroff will take you through to the UPL value proposition presentation. Mr. K.R. Srivastava, who heads our supply chain, will take you through the global supply chain presentation. Mr. Sagar Kaushik will again present on the global, he's the global CEO, and he'll be talking about the marketing and the outlook. Then we have Mr. Bhupen Dubey with us, who, as you must be aware, has recently taken over as CEO for Advanta Seeds. So Bhupen Dubey will share with us his views on Advanta Seeds and what he thinks about how he plans to shape up the seeds business as we move ahead. So let me start with the financial results first. In fact, before moving to the financial results or sharing the performance for the quarter as well as for the full year, I would like to give you a brief overview of some key elements which have significantly influenced agriculture across the globe, and in particular in the crop protection industry, especially during the year 15-16. Needless to mention, 2015-16 has been a turbulent year. We saw a very high volatility in currency, weak agri-commodity prices, I would say almost wild weather fluctuations. We saw some very erratic weather, increase in regulatory oversight, and some of these factors probably, we believe, has led to a lot of consolidation in the industry through M&A activities. UPL, though, continued to grow in this journey during this turbulent time and delivered exemplary performance, as I'll share with you the numbers shortly. And this all happened essentially because of the unique business model, coupled with some disciplined approach in terms of our internal policy and our continuous risk assessment. We mitigated the risk, the volatility in the currency through hedging policies, which we strictly implemented across the globe. Downtrading due to weak agri-commodity prices pushed up demand for branded generics. Further, our strategy to engage with the farmers also paid rich dividends. As regards weather, our balanced geographical presence and balanced product portfolio negated the impact of the weather fluctuations. Strong local and global expertise addressed the regulatory pressures in different geographies. And consolidation in the industry is throwing up opportunities, both for increasing the market share as well as acquisitions of products which could be made available to us. So while crop protection industry degrew by about 9.6%, I'm taking the calendar year because most of our peer groups, they have Jan to December numbers. But as you would see, these peer group members degrew from anywhere between 5 to 23%. And in this scenario, despite all the odds, UPL grew by 10% in the financial year 15-16. And this is a growth in rupee terms. If you were to take it in volume terms, we grew by 18%. So moving on to the financial numbers, our revenues, I'm first sharing the quarter numbers. Our revenues at 4,340 crores was up by 20% for the quarter as compared to the same quarter last year. Our gross margins at 1,740 crores grew by 25% over that of the last year. Our EBITDA at 981 crores for the quarter grew by 25% over that of the last year. EBITDA as a percentage to sale was at 22.6% for the quarter as compared to 21.7% same quarter last year, an improvement of almost 90 basis points. And profit after tax at 627 crores grew by 36% as compared to 460 crores of the previous year. Net profit for the period was 552 crores, which grew by almost 25% over that of the previous year. This is the growth chart. While we grew by 25% in volumes, 1% was due to price increases, which we managed to get, and we lost 6% on account of currency, thereby getting a net growth of 20% for the quarter. This is income by the region. As you would see, India, in the last quarter, we grew by 4% at 417 crores, representing 10% of our revenues for the quarter. Latin America, at 1,428 crores, represented 33% of our revenues, and it grew by a whopping 57% over that of the same quarter last year. Europe, at 872 crores, represented 20% of our revenues, and it grew by 8% over that of the last year. Rest of the world at 652 crores represented 15% of our revenue, and it was almost flat. It didn't, we didn't see any significant growth there. In North America, at 971 crores, grew by 13%. It represented 22% of our revenues. So overall growth was 20%, and this is the breakdown region-wise. Now we move on to the annual results for the full financial year. We closed the year at about 13,302 crores as compared to 12,091 crores in the previous year, a 10% growth. Again, during the same period, our volumes grew by 17%. So despite a 10% growth in rupee terms, the volume growth was 17% and price growth was 1%. EBITDA at 2,716 crores grew by 15% over that of the previous year, and EBITDA as a percentage to sales was at 20.4%. This shows a growth of 90 basis points over that of the previous year. Profit after tax at 1,421 crores grew by 20% over that of the previous year, and profit as a percentage of sales was at 10.7% as compared to 9.8% last year, again a growth of 90 basis points over that of the previous year. And net profit for the period was at 1,299 crores, a growth of 14% over that of the previous year. The sales analysis, in terms of the overall growth, as I shared, it's 10%. However, the volumes grew by 17%. Price increase we could get by about 1%, and we lost about 8% on currency, thereby giving us a net growth of 10%. Income by region, India represents at 2,713 crores, 20% of our overall income, and a growth of 3% over that of the previous year. Latin America at 4252 represents 32% of our total revenues and a growth of 25% over that of the previous year. Europe at 2035 represents 15% of our revenues and a growth of, it was flat, we didn't grow. Essentially, we lost out there on currency. Rest of the world, 1,810 crores, which represents 14% of our revenue and a growth of 2% over that of the previous year. North America at 2492 represents 19% of our revenue at a growth of about 10% over that of the previous year. Our working capital, net working capital for this year has been 91 days as compared to 86 days of that of the last year. And that increase of 5 days is essentially coming from increase in debtors. Although as you would see on screen, the receivables have gone up by almost 13 days, but we could offset a part of this increase in receivables by increasing our payables by almost 8 days. So net effect is 5 days. Our inventories are at the same levels at that of the previous year, that is at 90 days. This is our cash deployment, the cash which we generate out of operations. The PAT plus depreciation is at 1,923 crores. And the same was utilized towards working capital of 455 crores, capex of 965 crores, dividend outflow. This is dividend pertaining to previous year, which we pay cash this year, of 215 crores, and others was 204 crores, leaving the balance 84 crores available for investments and other activities. So now I hand over to Mr. Sagar Kaushik, who will take you through each of the regions and share the perspectives of some of the key highlights for each of the regions.
Thanks. Thank you, Anand. So I start with our home market, India. And India, we all know that there was a very, very tough drought. Many states were covered. However, we were able to encash some of the exceptional opportunities in the area of north of India, Punjab especially. There was a very high level of infestation, which was very often reported in the press, especially in the northern part of India. And but we were lucky that our product, some brands were able to very nicely control the sucking insects, especially whitefly. And that brought some good opportunity and for us, and at the same time satisfaction for the cotton growers. The performance with regard to our wheat herbicide, where we are the leader in the north of India, we are expanding beyond Punjab, Haryana, and Rajasthan towards UP and including Bihar. So we maintain our strong position with our brand. At the same time, we have a successful launch of another herbicide called Shagun. Overall, the agrochemical usage for the industry has been affected in India, and the liquidity has been pretty tight, especially because the market inventories or channel inventories at the distributors level were quite high. I want to just mention to you that with the efforts of almost now 3 years, we have the Farmers Digitally Advisory Center, which we operate nationally at 3 places, one in Mumbai, another Vizag, and third in Chandigarh. And there are more than 1 million farmers which are registered to this center. We call it AKC, and there is a constant communication from the morning till evening with our agronomists who are sitting and providing advice in the several areas of crop management to the farmers. The demand is quite good, and we understand what the farmers are asking, and therefore we are in a better position to design the innovative solutions. And also we are happy to provide these services even if they are not related to crop protection or seeds. Latin America, we had a good position. We were able to grow up to 25%, and especially in Mexico and Colombia, which are our really the fastest growing markets in Latin America beyond Brazil, we were able to establish the growth in our portfolio for rice business, fruits and vegetables. We are very happy that the acceptance of our fungicide portfolio in Brazil is now very well accepted in order to provide the solution for resistant Asian rust, which is the significant disease on soybean in Brazil. We provide really a sustainable solution, and that allows our brands, especially Unizeb, to perform better and better every year. Despite weak commodities, the soybean area in Argentina as well as Brazil increased. That's also an upside for UPL, as we have very strong portfolio for this. I must also mention that devaluation is a very strong headwind for the farming, but on the other hand, in markets like Argentina and Brazil, the farmers became more competitive compared to the US farmers. So they had the better advantage from the export standpoint to China or the other countries. So therefore, it was an advantage for these growers. The fruits and vegetables are often skipped because under the umbrella of commodity prices decline, we often forget to count that the prices of fruits and vegetables, they remain really strong because the processing industry is growing and the demand for the fruits and vegetables, especially in the emerging markets, is growing. So demand grows from both angles, and our portfolio does well there as well. Overall, we did experience a significant reduction in the insecticide market in Brazil due to the alternate technologies, the BT technologies, GM technologies which came on soybean, but it affected the Brazilian market as a whole. Europe markets relatively flat, but it was important to mention that we are able to position our organic portfolio for the increasing demand of organic farming in the southern countries of Europe, which brings us a very, very good position and growing position for that. Overall, fungicide business was increasing in potato and also wine, though there was a reduction in cereal crops. Rest of the world for us is Asia, Africa, Middle East, and I think we are still building our footprint, especially in Africa, and there is a lot of new registrations in the countries we have obtained, which will allow us to give us more the footprint and bring the new products there. There is overall good extension of our portfolio on cotton from the portfolio of India. We are able to extend to Pakistan quite successfully. And overall, we also see the opportunities coming to us with the trade embargo, which is being relaxed as far as Iran is concerned, where we had already a good market share. The Asia market didn't perform well, especially Southeast Asia. Both the rainy season failed in Asia, and the rice crop has suffered a lot, while in Turkey, which is a very important market for us, the market suffered because of untimely frost and the hailstorm that has damaged the citrus crop, also affected a couple of other strawberries and these berry crops and all, affecting the business. The North America, a good performance for us, 10% growth. And again, the driver here is our portfolio. We are able to bring the Lifeline, which is our brand, used as the non-selective herbicide, especially on the resistance weeds, which are resistant to glyphosate. And Lifeline is glufosinate. So therefore, this is a very strong alternative to control the resistant weeds, which are growing, and so as we were happy to achieve our expectation with the Lifeline. The other pre-emergent herbicide brand, Satellite, it is our third year, and the product grows within our expectations, and we are very happy for the continuous growth of our herbicide portfolio in the United States and Canada. We face quite competitive pressure with regard to price within the non-selective herbicide, and but nevertheless, this with the price competition, the potential for use of the product gets more and more unlocked, which is in the long term, the acceptance of the new technologies, alternate products is high. Fungicide use didn't go up because overall there was not the best situation for the crops. The western part of the US remained dry, and in the Midwest was a very floody situation, and there was dry situation in the southeast part of the US. And the rice and the cotton area as a whole got declined. That also affected our sales because we are a significant player in the rice in the US, and also we participate reasonably well in the cotton crop of the United States. With this, I'd like to hand over to Jay.
Thanks, Sagar. So, as briefed by, first of all, welcome everybody, and thank you for spending your time today to be with us. We are quite excited by our performance in a very challenging year. So, as Anand mentioned, our revenues are up by 10%, EBITDA at 20.4%, our profit PAT is up 14%, and return on capital is up to 20.7%, 0.07%. I'd just like to share with you very briefly about what is different with UPL and how we are trying to really take our business forward. UPL has certain key DNAs which are helping us to grow in very challenging times. As mentioned by Anand, the year has been very, very challenging for the industry. The commodity prices have been fluctuating, the weather patterns have been erratic, and in spite of this, UPL has been able to grow. In a year like this is where a company which is really focused on risk management, we are able to really show the differentiation between us and other companies. We have really been focused on a balanced portfolio. You know, our focus on supply chain, we invest far more money than most of our competitors in manufacturing expertise, and I believe that we are probably the best in class in building additional plant capacity and also being able to deliver goods around the world. We are currently setting up 2 additional manufacturing facilities, one in the US and in planning stage in Brazil. We are expanding manufacturing capacities in India and in existing plants across the world to meet the demand for our growth. Even today, we are in an envious position where we are short on many of our key molecules, so we need to really expand capacity. So CapEx will continue to happen going forward. The other strength of UPL is our portfolio. We are constantly, we are about to launch Batis Gold, which is exciting new insecticide for the Brazilian market. We have, it is an innovative product. We are actually launching one or two innovative new products in each market around the world, in each key market around the world. We have, and all these products are differentiated and also have some proprietary technology so we can patent it. We have a whole portfolio of adjacent technologies. Earlier on you saw that we are in the launch process for UPDT. We believe that this is one of the most exciting climate smart technologies which for agriculture. We think it's going to make a huge impact to farmers, and particularly because of climate change. This also helps in terms of stress management, nutrient management. We are looking at data, and I'm sure soon Naveen, who heads this business, will share with you in another presentation, but not today, I don't think, that we can reduce nutrient by 50%, water consumption by 25%, and get yield increases. This is a tremendous technology, and we're very excited with the potential of that. UPL has applied for 19 patents over the last 2 years, 34 patents pending. We have 14 products launched globally in the last 2 years, 11 products just launched in 15-16 around the world. We have adjacent technologies, and you will be pleased to know that UPL is one of the largest manufacturer of organically approved chemicals, which we produce in India, in Europe, and sell all over the world. We have a portfolio of biological products. We have biological nutrients, biostimulants, and organic formulations. We have 21 products in the pipeline. We have, I talked a little bit about the UPDT technology, which is branded as Zeba, which we believe will reduce the cost for farmer, reduce the risk for the farmer, improve his yield, and improve his profitability. One of as UPL has progressed from being really an industrial company in the 80s and 90s, where we supplied active ingredients to other companies, we focused over the last 10, 15 years to become a branded company. Today, I'm very pleased to say that almost 80% of our business comes from branded sales. Where do we go next? Our whole focus of UPL over the next 10 years is grow the branded business, but also be very, very close to our customer farmers and really have some kind of engagement with the farmers where we understand their needs and help them. So globally, UPL is focusing on building close relationships with the farmers and farming companies. We are trying to understand the farmers' challenges and bring technologies to really meet those challenges. So we have an existing portfolio where we are working with them, and now we are saying what other technologies which we can bring and how we can help the farmers to improve productivity. And this brings the relationship much stronger, and we believe this will help us to grow and keep our existing customers very loyal. We are working with big Brazilian farmers to understand their risks and see how we can reduce their risks by helping them with their cropping strategies. We have, as Sagar mentioned, we have the Kisan Adarsh AKC, which is the call center, where we are engaging directly with the farmers, and we are very surprised and impressed that we get about 50 to 60,000 inbound calls a day, where farmers are really interested in learning more, and we are training these people, and this platform will convert it into an app-based application which will become very intuitive for the farmer as technology is available to the farmers. We are working in Africa with NGOs to build value chains for farmers. So we are working on a very exciting project where we are helping farmers who are not able to get good value for their crops, together with other input companies, financial institutions, NGOs, to help them connect to the value chain. So how do we increase their profitability? This is a very large project, and the total investment will be not directly from UPL, but from the other organizations of up to $1 billion. We are implementing productivity tools. So as UPL grows, we are looking at how we can improve productivity for all our operations. And this is a huge, big focus. Part of the farmer engagement program, we have launched AFS, Adarsh Farm Services, which is really helping the farmers. We believe that the value proposition to the farmer is incredible. And when we interview the farmers who have signed on to the Adarsh Farm Services, they are finding it absolutely exciting, and we are seeing a 4x growth a year in this platform, and we are able to help him to really improve his profitability by almost sometimes 30%. Sometimes the farmers are saying they are able to swap to crops which are more profitable, which they couldn't do without the technology which we are offering. We have invested last year in a company called Sinagro. Sinagro also really engages with a segment in Brazil, which is a small farmer. A small farmer in Brazil is classified as 4,000 hectares, and Sinagro brings us a very close association with these farmers, where Sinagro really offers them services to help them to compete with the large farmers. So they act as an organization which helps them to amortize their costs of infrastructure together, and so they can really be able to be competitive. With that, I'm done. I don't know who's next. And so UPL, we believe we are well positioned to continue to grow. We believe that next year, and in spite of weather challenges and climate challenges and currency challenges, we believe UPL will continue to grow. And this whole challenging environment where there's so much consolidation is a fantastic opportunity, where we believe that UPL team is very focused on growing market share. And almost in every market we are present, we believe that in 2016, 17, 18, we will continue to gain market share. Yes. So I'll invite Mr. Srivastav to talk.
Good evening. I'll take you all through the supply chain portion. There are 4 areas that I intend to cover. One is manufacturing, which has been one of our core strengths. And in a year where many companies have either reduced their manufacturing investments or have postponed it to future years because of the decreasing market, UPL has continued to invest, and this has been one of our core strengths in UPL. Cost improvements has been another major factor in which UPL has always been working on, and I'll take you all through the major drivers in cost improvement. UPL has worked continuously on sustainability and reliability, and this has helped us in being consistent and in sustaining our supplies and in getting a good position from manufacturing. I'll also take you all through some of the major awards and recognitions that manufacturing sites have got in the last 12 months. What has happened? So in manufacturing, we set up new plants, both in technical and formulation. And this we have done it not only in India, but across various geographies. The major areas where we set up plants have been fungicide plants that we have set up, insecticide capacity enhancements, herbicide capacity enhancements, and formulation capacities. We set up fungicide capacities in India, in France, and in Colombia. And in the last year, the capacities have gone up by almost 60%. And in the current year, we plan to double our capacities in some of the areas in some of our major fungicides. Insecticides, the major plants that we have set up are in India, and the capacities have gone up by 10% in the current year, and we intend to continue investing in insecticide capacity in the coming year. In herbicide, the capacity expansions which have been done have been largely in India, which has helped us to increase our capacity by almost 40%, and we intend to almost double our capacities in the next 12 months. Formulation capacities we have increased significantly, and the two major areas in which we invest in formulations are in the more highly value-added areas. We have increased our herbicide encapsulation capacities by almost 200%. The granulation capacity for both insecticides and herbicides, we have increased by 300%. We have set up new formulation plants in Jammu in India, and we are in the process of setting up plants in Rotterdam. We are increasing capacity in Brazil, and as mentioned by Jay, we have taken up a new site in US, where we will be setting up a full formulation facility. Our aim in all this is to be closer to the customer and to be able to have a faster response and to be able to service the customer much better. Cost improvement has been one of the major areas in which manufacturing has been able to provide strength to the company. The major drivers that are there, the first two are improving technologies and yield improvement. We work in these areas through working on chemistries. We also work on process intensification, and we also do a lot of work on batch to continuous processes. This helps us in getting our consumption coefficients better year after year and helps us to maintain a strong cost position of all the products that we manufacture. The batch to continuous manufacture also helps us in our energy initiatives, and we have a dedicated team of energy experts who work round the year in finding out multiple initiatives which we implement across all our sites. Procurement strategic tie-ups have also helped UPL in a big way. We have done strategic tie-ups for many of our major products, and this has provided two major strengths to UPL. One is that we have reliability of supplies. These are long-term tie-ups, and it provides us cost advantage compared to competition on a sustainable basis. Also, the inventory, because we have a manufacturing plant in multiple locations, and because of our focus on manufacturing, we are able to alter our manufacturing plants depending on the volatility of the demand. So it helps us to maintain our inventories, whereas many companies who have to do tolling or who are dependent on others have to plan their inventories much in advance, and then if there are fluctuations in the market, it becomes extremely difficult to correct the inventories. The two major areas that we work in, sustainability and reliability, are in safety and in environment. In safety, one of the major areas that has been a cause of concern has been fresh contractors who keep joining us, and we have focused on training them. There are 3 levels of training that we impart to them, and we make sure that each of these contractors are fully trained before they go into the plant. This has helped in the behavioral-based safety that we have implemented in all our factories. We have also implemented inviolable standards in all our plants. There are 5 or 6 areas of inviolable standards that we have implemented in the areas where we found that was most important and most relevant to safety. What this has done is that it has improved our total recordable frequency rate, what is called as TRFR, and the international benchmark is 0.4. Last year we were at 0.47, and this year in all our sites we are at 0.39. So we are at the international benchmark in safety. During the last 12 months, we have also implemented phase 2 capexes and process hazard analysis. In the previous year, that is in 14-15, we implemented phase 1 capexes, and in the last 12 months, we implemented the phase 2 capexes. What the phase 2 capexes has done is that it has improved our safety rating in process hazards from 93% to 98%, and this is again very close to industry benchmark. I think what all these actions have done is that it shows our commitment towards safety, and it also helps us to be sustainable and reliable in our supplies to the market. In environment, one of the guiding principles that we have always followed is to be beyond the statutory norms in implementation in all our sites. Just to give you an example, in Vapi, the norm that is set for the liquid chemical oxygen demand, the COD, is 1000 ppm. And we have consistently maintained below 200 ppm in our Vapi plant. In the last 12 months, we have done a lot of work on water conservation. This is processed water, and we have developed methods by which we are able to recycle almost 60% of the processed water that we use. This has helped us to conserve water in our manufacturing and has also helped us to improve our costs. One of the causes that we are working on is to get all our synthesis sites to zero liquid discharge sites. Earlier, a few years back, our Ankleshwar Unit 2 we had converted to a zero liquid discharge site. In the next 12 months, we'll be working to convert our Halol site to a zero liquid discharge site. We believe this is a very important step, and it's a direction, it's not a requirement of the government, but we are doing it because we believe this gives us a significant advantage in getting our approvals and in getting our capacity expansions. In the last 12 months, we have also set up facilities to convert a lot of our waste, which was going to the waste disposal site. We are converting it to value-added products. So we are cleaning up these wastes and converting it into good products which go to various industries. So we have been supplying this to paper industry, to tannery industry, and to detergent industry, and to multiple other industries. Besides reducing the waste, it also helps in providing value-added products. I think there are two areas that this majorly helps us is in getting reliability of our supplies, because we are able to work continuously, whereas many other companies have difficulties in an environment where they have changes to make. And second area is that in terms of expansion and approvals, this facilitates us to get faster approvals from the statutory authorities. I'll take you all through some of the awards and recognitions that our factories have got in the last 12 months. Our Barranquilla factory in Colombia, it won the Emerald Cross Category Excellence Award. This is the company's, this is awarded to the best company in the country, and typically Shell was getting this award, and it's a matter of great pride that our factory in Colombia won this award last year. Our Rotterdam factory was recommended for the National Business Success Award, and this is just a few months back that the Rotterdam plant has been recommended for the National Business Success Award in chemical sector. The Vietnam plant has won many awards. It has been awarded by the national, it has won the National Award for EHS, and it has been declared as a model factory. And it's been used by the Vietnam government to encourage people to copy our plant in terms of EHS systems and in terms of 5S implementation. Our plants in India, the Jammu plant, it won the Golden Peacock Award for safety. And the National Safety Council of India also gave it a safety award. The IMEA, which is the Indian Manufacturer Excellence Award, this for green manufacturing was given to our Ankleshwar Unit 1, and a gold award was given to Ankleshwar Unit number 3. These are our major awards. Thank you, Mr. Kaushik. Can you come?
So I'm back again, and my presentation would cover the portfolio areas and how we engage with the farmers, and how the differentiated approach we have with regard to going to the market. But before I start these portfolio topic, I'd like to give you just the highlights with regard to the market for 2015, which is the calendar year 2015. And it's already mentioned that the total market in terms of dollar terms internationally, global market declined by 9.6%. And the result was all the headwinds pertaining to the weather condition or the declining commodity prices and including the volatility of the currencies. All three actually had affected the market and especially the dollar getting so strong that affected the total market decline to now 9.6%. Some benefit was there with regard to the Latin American and the Brazilian farmers because they were able to export better. But at the end of it, we still find end of 2015, the stock level of the commodities are still high, excepting for cotton and rice. So therefore, in general, the commodity prices will remain at the lower level. That is the outlook for even 2016 calendar year. Now, this scenario is the global scenario. Does this entire scenario is applicable to UPL? Answer is yes. But within there are segments where we think that there is advantage UPL. And the very fact that when the headwinds were against the total global market conditions, UPL could withstand the pressure of the declined prices of the commodities, the bad weather, unfavorable weather. So all these aspects we were able to withstand, and still the company has grown by 18% on the constant exchange rate basis. So our portfolio is relatively drought-proof. Our currencies have been well hedged together. So I think there are some inherent factors which have been built in UPL, and that's a overall advantage UPL. Now, the second part is important to mention that the markets which grow faster are the emerging markets, including Brazil. And we happen to be the young player. We are not at the stage that we are matured, that the total impact of the market is really affecting that player. But we are young. Young means our portfolio is new. Young means that our market footprint is still there is a lot of opportunity to grow. So in terms of the people, I think overall investment opportunity for us in these markets is high, and we believe that's an advantage because we are a young player. The growth of our portfolio, the development of the new portfolio globally and also in the emerging markets is very strong. And even if there are the weather is unfavorable or there are currency effects, but one thing is pretty common is that the farmers, they love new products. They want to get the new solutions, and the acceptance of these products are good. So our strong pipeline will also bring the advantage. And finally, it is very important to re-emphasize that the resistance management portfolio, be it for the resistant weeds, be it for the resistant diseases, I think the portfolio of UPL is pretty strong, and that brings really advantage to UPL that we have the portfolio that grows because the resistance areas and the resistance crops, they are increasing manifold, especially in Americas, including North America, Argentina, and Brazil. The other factors in terms of the outlook for 2017, the recovery of cotton and rice. Here also, UPL is a very strong player in cotton in India. We are a strong player, also participate pretty well with our portfolio in the United States. And this crop is going to recover in 2016 calendar year, and the same thing is expected to happen for rice. Now, the rice area recovers in the United States. The crop is a small crop in the US, rice. But we are really somebody there with the very high market share, so we will benefit from that. Fruits and vegetables market will be quite significant in the emerging markets of Latin America and Asia, and we will see this market will have still good growth. And the currency devaluations supporting the Brazilian and Argentinian growers to put them into a better competitive situation. Overall, we do expect with the so far announcement of the monsoons that the India market, if it recovers, that will be a significant progress for the whole industry and also for us in India. Now, generally, I think the way I will communicate is that how we are different than the rest of the industry. And so look at this portfolio with regard to the agriculture value chain. So generally, we find that the people or the competitors, our peers, are much more present into the classical segments of seed treatment, herbicide, insecticide, fungicide, and full stop. But our approach to the portfolio is to look at this entire agriculture value chain. So now we really start from the soil management. How can we address the soil? How could we improve how could we have the technologies that could improve the soil management? And then not only going up to the harvest, but the post-harvest with regard to the food grains and also with regard to the fresh fruits and vegetables. So therefore, the agriculture value chain, be it for the staple crops or the staple food or for the fresh fruits, so UPL addresses right from soil to the post-harvest. And that's the difference we have with our peers. There's one significant difference I would mention. Now, the way we work in terms of the innovative solutions is to look at the crop. So we work for the rice crop solutions as a model. And we have this 100% subsidiary RiceCo, which is based out of Memphis in the United States. And RiceCo, they work with the portfolio for all the 4 important critical stages of the crop, starting from the seed to the seedling, and then the flowering and the reproductive stage and the maturity. At each of the crop cycle, part of the crop cycle, we have the portfolio to provide these solutions to the grower for the big growers of the Americas, Latin Americas, or the US, and of course the small growers in India, South Asia, and also Africa. Now, this is just the model in which the product development, the R&D work, etc., is done. But this is also true for the other crops like soybean. And this is one picture you see that the resistance weeds. On my left-hand side, you see the crop which is full of resistance weeds. And these are not grasses. These are the broadleaf weeds, which are so difficult to control by the famous herbicide glyphosate. And therefore, the alternatives are sought by the growers. And on the bottom, you could see our 6 important brands, which are globally used to address this resistance issue satisfactorily by the farmers, and this portfolio is growing. So we also participate in a very important segment in the United States, which is the aquatic segment, especially in the water bodies and the water streams, etc. And you see that the aquatic weeds, they can create so much of resistance for the flow of these streams, and our technologies are helping to clean up the aquatic weeds for a smooth functioning of the water bodies and the water streams. We are the largest player in terms of the production, in terms of the marketing, and in terms of the overall stewardship of product Mancozeb. And you see here the list of the fungus. There are 66 fungus which are resistant to benzimetrazole chemistry, and 36 fungus to triazoles. So like that, you have almost 130, 140 fungus which are resistant to the alternate fungicides which are available or which are sold in the market. But these fungus, resistance fungus, can be easily addressed by a multi-site fungicide, because for the cell biology, there are different parts of the cell biology where the resistance can appear. But if it is a multi-site, it works like inducing the resistance in the plant. And therefore, the fungus will actually either will be completely killed or prevented. So that is what Mancozeb does. And the use of Mancozeb is really getting much more unlocked in the past in the field crops. Now, looking at the portfolio, it's also important that in terms of innovation, we also create the new segments. And for example, what you see, the soil is the new segment we try to create. And therefore, once you create this segment, I think it is your marketing opportunity. And you can establish yourself with your portfolio first. We have very specific portfolio on how to address the soil from the stimulants point of view, and also from mitigating the drought situation there, which I will touch later. Then there is seed treatment and the mix of the adjacent technologies as the segments. So part of the portfolio we have been able to carve out, and especially in Europe, the organic portfolio, which is addressing to the increasing demand for the organic food. And these are our three products, the microthiol, which is based on the sulfur, and the cuprofix. The family of cuprofix products are based on copper. They are all produced in Europe, in France. And Steramil is very much on the plantation crops going in India. So UPL is now the biggest player to service the organic farming in markets of Europe. New technologies with regard to vector control. We have Natula as a new product. It is the registration is on its way, maybe a matter of few months. And then we are able to offer to India, Asia, and some of the Africa parts a product that can control the larvae for the mosquito, which spreads the malaria and the other contagious diseases. So, and this product is a larvicide, and this is a tablet of 60 grams, which is to be put in 60 liters of water. You get control for 60 days, and the water is potable if it was potable before the application of the tablet. So it's really a fantastic new technology and sustainable technology for future. We have also alternate product to handle the vector control segment. The adjacent technologies referred already about Zeba, and he gave certain advantage of it. I don't want to repeat, but very specifically, if you look at the benefits of Zeba, it is either on the how to improve the income for the farmer, and at the same time, the stewardship and addressing the environment at the same time, keeping the environment even more healthy. In terms of the income, the yield increase takes place because the plant does not go through the stress situation at the time of germination and the first 60 days of the crop. And if there is no stress during this period, it would represent into the higher yield for the farmers. Similarly, the cost reduction by optimizing the use of fertilizers and the nutrients. On the environment side, if you are able to conserve water, if you are able to also manage that the volatile gases are not formed out of nitrogen, so therefore you don't form more of the nitrous oxide coming out of the soil. At the same time, the leaching potential gets narrowed down for the nutrients, like especially the mobile nutrient like nitrogen. These are the pictures taken in the field, and you could see that Zeba-treated potatoes are giving 9% more yield, and 9% more yield in those areas where the productivity is already closer to 30 tons. So this is a huge advantage there. At the same time, you see the size of the tubers are much more bigger in the potatoes which were treated with the Zeba. Not only potato, we have the similar advantages and even better advantages in onion, 16% yield increase, and tomatoes. And so these are specific to Zeba. Now, it's important from the portfolio point of view to keeping our innovation rate at the level of 15%, which we have targeted. And I'm pleased to inform this year we will touch 15% innovation rate, which means the 15% of our total turnover during this year, FY17, is expected to be from the new products. And indirectly, every 5 to 6 years, we will be able to completely rejuvenate our portfolio into a new portfolio. So farmer engagement, how do we have more our feet more in the ground, closer to the farmers? We talked about the farmers' engagement via the Adarsh Kisan Center, and farmers needs the timely advice to support their crops. Farmers also need the services with regard to more accurate and better technologies with regard to the application of the products. And in both areas, in the last 2 years, UPL has taken very strong steps, very innovative steps to be more closer to the farmers in providing this service when they need it. These are some of the pictures of our the trained agents who are sitting in the advisory centers of the 3 locations in India. Further farmers' engagement via the activities besides AKC, like the Unimarts. We have actually the retail counters, sort of a model retail counters, which also helps the other retailers to get the knowledge from here. Now, it's also important that how we are different in many markets in terms of distribution of our product or our go-to-market approach. I'm just giving an example of India first. And normally a classical company, crop protection company in India, would have the manufacturing setup, has a set of the distributors, 2,000, 3,000 distributors, and with a span of control of 25 retailers to a distributor. But UPL does differently. So UPL has actually the UPL, the outfit for the distribution, which is we call agro formulation, and we have the Swal Corporation, which is vertically different, a second line of distribution, and they work with their own visions and the policies with regard to the distribution. And then we have the Agrotech, and they are having very strong support and service provided with the products to the national formulators. And we provide the fumigation services for the food as well as to the processors like Pepsi or McCain. Now you can see that India being such a vast territory, we are able to cover with our UPL agro formulation and Swal almost 8,000. We are able to cover 8,000 distributors. And if the span of control of 25 is right, so we go almost up to 200,000 retailers. And therefore, we are really creating a good span of control that we are able to flow our products when they are in demand or they are needed, and well connected through the farmers' engagement as well. So these are the pictures of the fumigation services. Is not the product, it's basically the service we provide. Actually, it comes out to the user much cheaper than buying the product and then the service and buying the service separately. Rather, it's the very efficient way to take over the problem of the customer or the user. So this is the godown where the foods is stored, either FCI or the central warehouses, corporation, etc. So this is for the food grains. At the same time, if we run the Trust Plus program in some of the banana growing areas of Latin America, this is the picture of Costa Rica, and where we do not supply the products, we provide the technical services, which are really made through very technological evidences. We sit with the farmers and we say, well, out of the 50 sprays in a year, which spray should be done at what point of time, and at the same time we provide the aviation services to the farmers so that the effect of the product is really predictable and the growers are happy with the services and not just with the product. So these are the Urja technologies which are more globally used for the potato, especially by the processing industry, to avoid that there is no roots, etc., coming out of the potatoes, and it prevents that, and the value and the quality of potato is well maintained, which is very helpful for the processing industry. There is absolutely no sprouting takes place of potato. So again, a difference I wanted to present compared to last year. We showed about that how we synthesize within the R&D several chemistries, how do we develop the new products and the mixtures. But this time we are going further down, that we have established the Innovation Center in Brazil in 70 hectares, where we are able to test our new products, our new formulations, our new mixtures. We are able to do the bioefficacy test ourselves. We are able to then actually develop the formulation there. So it's really a very integrated R&D center in Brazil. And at the same time in India, we have opened up a field trial station, which is for the development of the international portfolio of the new products and the formulations. So with this, I'd like to hand over to Bhupen to address with regard to Advanta.
Thank you, Sagar. Good afternoon. Moving from agrochemical to seed, I think bare essential of agriculture, as we know, are three. For agriculture, you need soil, essential number one. Another essential is water. And these two are given. And to begin agriculture, third essential is a seed. So out of three essentials, I think seed is an interesting business, and UPL Group decided to embark on it in 2006. From then onward, in the journey of nearly 12, 13 years, we have really covered miles. I would like to take you through about 7 or 8 slides, the journey so far, and our thinking going forward. Who are we? We are a global agriculture seed and technology company. Like UPL, Advanta also, footprint is global to begin with. Advanta is committed to promoting sustainable agriculture through innovative research and technology, where the R&D is the core, providing farmers with quality seeds and technology to enhance the crop value and bring prosperity to the farming families. These are our Advanta brands. Globally, as some of you are aware, Advanta brand is available in Southern Hemisphere and a couple of other geography. Same group had different brands, like North America is Alta Seeds, Australia and the Thailand is the Pacific Seeds. Golden Seed is a company we bought, which is basically vegetable seeds. Vereda Seeds is basically Brazil and the soybean flag. So these are the names which has a lot of brand equity, and therefore we decided to continue with it because farmers connect with those brands. Where you can find us, Advanta. This is the metrics which indicate geography and the core crops we are focused on. Forages, you are aware that the dairy industry is flourishing around the world, more so in Asia, and India is a vibrant sector. Forages are providing a seed, which are really providing nutrient to the cattle. We are active with this portfolio in India, America, Australia, Europe, Africa. In corn, we are operating both the segment, the temperate corn as well as tropical corn, and the geographically we are focused on Asia, Africa, South and North America, Australia, and Europe. Rice predominantly is Asian's crop, and our portfolio currently is focused primarily on India, and a little small business we began in Vietnam and Indonesia. Then we are into vegetables, again, India and subcontinent surrounding area. Wheat, we are into Australia primarily. Canola, grain sorghum, sunflower, and soybean. We just began a couple of years back, our R&D, and now commercial launch as we speak. This week we are going to launch our formal soybean brands in Brazil. Look at micro events which are impacting agriculture and thereby to seed sector. Increasing global demand for crop production and food shortages, we all are aware about this. A lot of economists are talking about by 2030, we need to increase our agriculture output by at least 50%. Huge challenge for us. And therefore, we believe that long-term growth opportunities are immense in the seed sector. Drought, water, and disease constraint, as you heard in Sagar's presentation earlier, the challenges agriculture is facing. We see this as an opportunity from seed angle to develop the drought-tolerant hybrid, and we have the germplasm capable of delivering that kind of hybrids going forward. Digital capabilities and technology development. I think this is a fascinating era we all live in. I always believe that, we are at nearly 7.5 billion heads, human heads on Earth, and out of that, nearly 4 billion humans are connected electronically via smartphones and whatnot, and therefore, it's important opportunity for us to develop the technology platforms to connect with the customer directly. We already started initiative in UPL, as Sagar indicated, via our Digital Connect program. We intend to extend that program to Advanta seed farmers also. Government and regulatory changes are happening because many aware groups, especially in urban societies, are demanding what they should have and should not have on their plate. And this is really tightening the regulatory system around the world. We are trying to align ourselves to pressure points which are coming out of this. Volatility in commodity prices, currency movements, and weather patterns. I think entire thing, somebody has really nicely developed an acronym called VUCA world. We live in a VUCA world. That means world is, coming month is totally different than the previous month. There is no comparison. And therefore, management team which are really aware about it and develop the management system to handle this kind of challenges, can really tackle this kind of situations. This requires diversified germplasm mix, impact on the seed prices and the trait values. Core business growth engines and Advanta, there are 4. Customer centricity, we are there in many geographies. Some geography we are yet not there, but that is going to be the core going forward. Collaboration and partnership. Seed industry today around the world is about $42 billion. We believe that it has a potential to go about $65 to $70 billion going forward. And in this, our own R&D is not enough, and therefore our approach is to collaborate, to partner wherever we have like-minded and complementarities possibilities available. Focused product portfolio, differentiation through innovation are the 4 core growth engines which we are going to focus on. Customer centricity, understanding when we are closer to the customer, you develop the insight, and those insights leads to direction for our R&D. As I explained to you, dairy industry, India has the biggest output of dairy. Some of you are aware. India produces nearly 140 million liter milk in a year, highest in the world and growing. Despite the fact that if you don't really grow at the rate of 3 to 4% per annum, by let's say 2025 or so, experts say that we may have to import milk, despite the fact, because we need to produce from the current level of 140 million liter to 200 million liter milk, right? This requires dairy industry to be more professionalized. In India, currently is about 10 head counts to about 10,000 head counts is a range of dairy. And many states like Gujarat is advanced, we know, but Punjab, Haryana, UP, Andhra Pradesh are taking a lot of lead. And then there's a national dairy plan, which has got 3 components, primarily the genetics of the cattle. We are not there. A lot of institutes are working in, academics are working in. Second important aspect is the nutritional aspect, and third aspect is the management. Out of 3 components, as per the national dairy plan, second component, nutritional aspect, is very interesting. And just to put entire nugget of experts, I believe that many part of Asia especially, they are investing a lot in high genetics breed, like HF, Jersey, etc., etc. The farmers are paying huge amount of money, but their feeding habits are outdated, old. The nutritional aspect the same. Just to put in perspective, the farmers are buying, let's say, Mercedes car, but they are actually feeding the car with a kerosene mixed petrol. So as a result of that, they are not getting ROI what they are supposed to do. We identify this as an opportunity for us. So forage segment in India and adjoining area, we surveyed that market. We realized that it is all delegated or left to the small traders and regional players. Our Advanta team identified this as an opportunity. Here is an area where we can really bring a lot of value. We launched series of products like Makhan Grass, NutriFeed, etc. Super premium product, providing a lot of nutritional aspect to the animals like protein, etc. Another is a drought tolerance. I think as frequency of drought increases, intensity of release rain also increases. In other words, let's say in 4 months' time, we have let's say about 66 days are rainy days, which are okay. But now instead of 66 days rainy days, same amount of rain also sometimes happens in 30 or 40 days. Now this kind of vagaries and an uncertainty requires a plant standing in the field which can really withstand. And therefore our R&D is working on identifying the genes which can allow this. One example is in India we launched a corn product called PAC 740, which performs the best even when there is a water stress scenario. About 20-22 quintal its production can come out. This is the area which we are working quite strongly. Another way of tackling is a crop, let's say corn, if I give an example, mid-maturity is about 110 or 120 days. If you reduce this duration of from, let's say, 120 days to 10 days, or let's say 110 days to 100 days, so 10 days, crop is not exposed to the vagaries of the uncertainty in the field. This also means a lot from the, de-risking the agriculture. So the other approaches we are putting in as a breeding target for our scientists. Collaboration and partnership. So as I indicated, that our strength is what we leverage, but then there are other areas. Other competitors are good, and we also try to align with them. High omega and protein grass seeds. For example, here is a company called Barenbroek from Netherlands. This company has got 16 breeders working on breeding the grasses. Just imagine the specialization. We are not there, but they are focused only in a couple of geography in OECD. They are not around the world. We are around the world. And therefore, we join the hands, and wherever Advanta is present, and then they are not present, we are taking their genetics and marketing and branding it. So one example. Second example is EMI sorghum technology. We tied up with BASF for sorghum areas. RR canola we tied up with Monsanto, and already we launched in Australia. And soybean genetics, Don Mario, Brazil. Here is a company which has got one of the highest diversity of the soybean genetics, and we tied up for them. We're also trying to test out in some other geography, including India. Focus product portfolio. Currently, the crop which we are focusing are grain sorghum, forages, corn, canola, sunflower, soybean, and vegetables. Differentiation through innovation, advanced global R&D. We have 16 research stations and 2 biotech centers spread around the world. This is our engine of innovation in Advanta. Sagar indicated for UPL innovation rate is about 15%. We have reached there. In Advanta, that figure is about 28% as of now. Over 300 environments with testing areas worldwide. Advanta has 60 years of research in plant genetics. Germplasm bag consists of proprietary developed germplasm, public accession and wild species, different sources of trait for the biotic and abiotic. Advanta seeds hybrids are suitable carrier of the added value technologies like GMs, chemical seeds treatment, microbial treatment, and many other potential novel technology. Now, all the keywords we have put in here, you must have heard in Jay's presentation and Sagar's presentation, and that is an area where we find a lot of bridge technology or synergies, area of synergy possibilities for us. As we know that seed treatment segment is improving, growing quite fast. UPL is developing seed treatment novel products, and Advanta seed can be a carrier. Advanta hybrid performance will be one of the driver of the successful merger of Advanta and the UPL going forward. Sorry, I just, going forward, from let's say 2006 and 15, UPL was purely agrochemical company till 2005. February 6, we acquired Advanta. Since then, till 2014, company focused on strategic acquisitions to build the global portfolio. established global headquarter and leadership team. This is what we achieved in the last 10 years. Going forward, we are going for full leveraging R&D, investment in R&D and innovation, and new geographies, and new crops which we are going to expand now. And with the help of merger and amalgamation with UPL, I think this entire process, which we intend to accelerate between 2016 and 2020. So thank you very much. Anand, over to you.
So as you all are aware that we had announced the merger with Advanta Seeds merging into UPL, I'll just take you through the slide we had presented earlier, sharing when we announced the merger. And this essentially reflects the synergies that we believe will help the seed business to grow exponentially. At the same time, it will benefit UPL. Just one more slide, which is sharing the status of the merger. As you would see that we have already got approvals from the shareholders for the merger, and now the petition has been filed with the High Court in Gujarat, and we expect that over the next 2 to 3 months, we should be able to close the transaction. With this, we'll end the presentation here, and I would request the panelists to come up here with us so that we can take the Q&A. We'll spend about 35 to 40 minutes on Q&A. Thank you very much. Yeah, Mr. Shroff, Mr. Sagar, Mr. KRS, Mr. Bhupen Dubey, can join us on this. Yeah, that's great. Can you just switch off the screen, please?
You can put this light on, huh? This.
Make this light bright, please.
Ye light chalu karo.
Yeah, any questions?
Hello. First, thanks a lot for a detailed presentation. So what I would like to understand is 2 years ago when we were, in your communication, it appeared that the focus was to bring down the debt. But this year when we looked at it, we have invested something like about 1,000 crores and talking more on the capex side. So if you can give some more details on how much of capex is going to be spent over the next couple of years and the activities that you have said. Second is there a change in your think tank, probably in the last year or so, that today we are seeing a lot of growth, a lot of cash coming through, that there is a need for capacities to back your growth. And can you also put it in terms of context of the capacities that are there globally? Because I think that's something that we are also hearing through the press and through various other media sources. There is enough capacities on the ground as far as agrochem is concerned. So whether this is really going to benefit and when it's going to benefit for us.
Yeah, so I think we as UPL, as you can see, we are gaining market share in most markets, and we believe that will continue to gain market share. If you look at our margin, our gross margin level and our net margin levels, also EBITDA levels, we are much higher than our peer group. That's that margin is primarily because of the fact that we are able to gain market share. Also, we are able to be competitive when we need to be. We can take whatever business we really want and still make better margins than the peer group. So we think that is a very strategic advantage. I think that we believe that investment side we will continue to invest about 100 million or so in our manufacturing expansion. Because we do it so well, we believe that that is equivalent to at least twice as much as our competitors would be doing to get the same capacity. I mean, yes and no. The last question that you asked, what about the global capacity? These are all specialized plants. These are not a multi-purpose plant. So you can't really say that there is plant capacity, but can you make this? There's a lot of technology, there's a lot of innovation. So if you see how our technology is evolved in manufacturing, I think in a 5-year period, our same plant may look very, very different because we've innovated so much on improving efficiency, plant utilization technology. So we are constantly improving, constantly reducing costs. In some products, we can reduce costs. In new projects for the first 2-3 years, we can reduce up to about 25% a year cost reduction. And also so being able to gain market share. This is a very critical advantage for us.
Just to add further to what Mr. Shroff said, about 40% of our capex is also towards registration of our products. And as we expand and grow, we are spending a fair amount of money on registration of new products across the key, I would say, agri territories. So that also investments continue to take place as we grow.
Yeah, and particularly all the proprietary technology, all the patented products, we need to invest in regulatory packages.
Also, actually, the regulatory requirements are increasing. You also hear that in the global news or regional news. Markets like Europe, they don't grow so much as I have shown you. But if you see, their requirements for the additional data is exponentially growing. Just to maintain the products, the industry has to spend almost 50% more money than before. So these are also part of the capexes.
Please.
My name is Prakash Bua. My compliments to the management for producing quite good results in the very challenging times and the background. It will be interesting to know that share price of UPL has advanced by 50% in the last 60 days. I compliment the management for such excellent performance. Actually, to study the UPL is not like studying an elephant, but like studying a dinosaurus, which I observed, which I experienced. Because there are so many multiples, and studying its impact on the price is more important, for which the interaction level of the executives with the analysts can be improved, I feel so, in terms of information, knowledge, and the explanations. I would remind the management of making some commitment some 2.5 years ago that turnover of the company will be doubled, top line will be doubled. Around, I think 2012 is a chairman's statement that states. So in that context, how do you see that we can reach a figure of 25,000 crore in the next 1 or 2 years? Is it by acquisitions, strategic acquisitions, which is a must, or any other method? That's one. I got many issues. I'll mention only one last issue, which is very important to my heart, and Mr. Shroff will appreciate it. Jai Shroff will appreciate it. Can we do something? We talked about digital connectivity. Can we do something for about prevention of suicide by farmers as a social measure by this leadership company? I had made this point in the EGM also. Thank you.
So I'll start with your last question. I think that the UPDT technology will impact this in a dramatic way. We believe that the long dry spells, the impact of on agriculture is tremendous. We think that we are working on, we are trying and testing the technology where we can, if there's a 30, 45 days dry spell when it's 45 degrees temperature, how it's going to impact. It does give an impact, but if it doesn't rain, there's nothing you can do. The real impact is the cost of production. If the farmer is continuously losing money and not able to improve his productivity, then he loses money. So how do you do this? We think our UPDT technology will impact that a lot. There is a big opportunity to impact. I mean, we don't say that exactly because every condition in every village, in every area, and every farmer is different. So you can't, and I'm not talking about suicide as such, but a lot of farmers go through a lot of stress. So what we believe is that if we can reduce their risk, if you can reduce their risk, then we can really reduce the possibility of them going through any kind of bankruptcy situation, which eventually leads to all kinds of other things, not only suicide. So that's the other thing. We are just piloting some insurance schemes for high impact disease and all that. We are launching it with our AFS farmers. And last year, cotton farmers in Punjab were dramatically impacted. We've been able to work out some insurance products with the insurance companies for certain high impact disease where he could cover his cost. So at least that if the farmer goes through a situation of absolute loss, at least he can pay his bills and a little bit of profit, so he doesn't go into a debt trap. So we are working on various pilot models, and we think that in a few years we should be able to do that.
You could say something about mergers and acquisition strategy in order to reach the target of 22 to 24,000 crore turnover by 2018. If we consider even 13 as a year of promise, in the next 4 years, we had a plan to double the turnover. Could you say something on that? Because our top line will be 15,000 crore after acquisition of Advanta, which is about 13,000 crore today. So it will exceed 15,000 crore. So next year, how much you expect?
So we, our stated number is that we will grow 12 to 15% depending on the year. I think in terms of volume, we've grown 17%. So we are on track to double our business we have done it in the last 20 years. Every 4 or 5 years, we double our business. We think that UPL can continue to grow at that rate.
Thank you.
There is one more comment I wanted to make with regard to the question you asked on the farmers' society, etc. See, I think another initiative which is coming out of the learning is that India has such a really serious drought during the last year, and also the last to last year was not less. But what we have understood that in our own business, our vegetable seed business has not been affected. Actually, during even the drought year, our business of vegetable has grown significantly higher. So we believe that we will take some more initiative in the drought-prone areas of Maharashtra and Gujarat, and using our, the seed potential for the vegetable. We are a very strong player, and we will like to really take certain territories, because with the vegetable farming, the cash return to the farmer is rather pretty quick. So at least there is one stream of income which is available to the farmers, besides the long-term crops of the field crops. So we will take some such initiative in the support of drought-proofing the business. And if we have to drought-proof the business, we should make an attempt to drought-proof the farmers as well.
Good evening, everybody. Shiladitya, ICICI Prudential. So just wanted to check regarding Brazil. One of the things we had mentioned that I think it's a 10 or 12 billion dollar agrochem market and from the current sales, I think we have around $700 million of sales there. So given what is the market share there and how fast can we grow? So because this year we had a very strong growth, is it repeatable in the next couple of years?
Yeah, we have our Brazil, Latin America, yeah.
It's our platform there and our strategy there. It is quite well designed in terms of momentum and the process. Say this year the market in Brazil have decreased significantly from last year. Like say 14 to 15. We have about 18 to 20% decrease in market because of the exchange rate, because of inventory, many reasons. And we have been the unique company with have a growth in Brazil, and our growth was we grew in a big way last year. And the sustainability of this growth will be keep it in the next years because we have a tremendous portfolio to be launched. We have an incredible pipeline. It's an investment what we have done in the last 10 years, what it's coming through now. Say in the last 3 years, we have been the most successful company in getting registrations in Brazil, and we expect that we will be one of the most successful company in getting new registration in the next 5 years because we are keeping the focus in applying new products, investing in the registration. As Sagar mentioned and Jay has say, we have implement our labs, our field station, our screening lab in Brazil to develop the new technology. It's the number of products to be launched in the next years and the increase penetration of our new technology for rust control. I believe we will deliver very good results in Brazil in the next 5 years. We have applied for registration about 20 products last year, and we expect to apply another 20 this year. And this is a long process, but if we apply every year, we will have new products coming. And this is our goal. And Me Too products to us in Brazil represents a very small portion today of our sales. In about 3 years, we have shifted from a Me Too to a very innovative product portfolio in Brazil. And we are quite optimistic about the new product launch in the next years. And this year, as Sagar mentioned and Jay, we will launch our Batus Gold, what is a very impressive product insecticide with control whiteflies, control boll weevil, control some very special insects, which will be a big growth again.
And just to take on from what you were saying, this year FY15 markets declined 20%. So what was the size of the total agrochem market in Brazil?
The size of this year was about $10 billion in 2015. About $10 billion.
Right. And in terms of gross debt and net debt, how did we close the year?
Yeah.
Some financial diseases.
Yes.
Yeah, so basically, yeah, gross debt was at 4,298 crores, 4,298 crores, and our net debt was at 3,230 crores.
And same numbers last year?
Same numbers last year were 3,000, the net debt was 2,363 crores. So there's an increase by about 867 crores.
And this is largely related to working capital?
No, this is largely related to some of the investments which we have done. As you are aware, we have invested, we bought 40% stake in the Brazilian subsidiary, Sinagro, Brazilian distributor, Sinagro. So some investments were there. Some investments were towards payout for when we increase our stake in UPL do Brazil from 73 to 100%.
And just one last one is that if Brazil is now 1/3 of the sales, if Brazil keeps on increasing.
Latin America.
Latin, yeah.
Latin America. So if that portion increases, should we assume that the working capital intensity will increase, will need more working capital?
Well, we are trying to find some solutions around those, but at this juncture, I would say you shouldn't be surprised if it goes up by 3-4 days.
Okay.
From current 91 days, we could end up with about 93 to 95 days.
Thank you.
Well, and also our expectation is that the India would recover with the so far announced. So there the working capital cycle,
California.
India and also part of the US, California area. So with the positive outlook of these markets, I think these are the short-term working capital consuming markets. So it will give some kind of a hedge effect.
Thank you so much.
Hi, I had a question on Latin America. Mr. Kaushik briefly pointed towards the footprint that UPL has in Latin America, and it's a young player. Would it be possible to give some sense on what what can be the footprint we have in Latin America in terms of, say, of all the regions that are there, where we are present, where we can go, and also the crop segments?
So we have the regional director from Latin America, Felipe.
In Latin America, in spite of Brazil, we have business in 26 countries in Latin America, but we have business heads in five regions. One is Mexico, which is our largest region there in Latin America. Also, we have in Central America and in Costa Rica, we have our head, and we are taking care there, particularly in bananas. Then we have the Andean regions, which is the main crop there is rice. And then we have in the southern part of Latin America, which is Argentina, we are mainly focused on soybean and corn.
That's our footprint in Latin America.
Yeah, and if I could just extend that question for US as well. So from what I understand, we were not fully present in Midwest of US earlier. So now, what is the potential that we have? Can we grow more than the market in US and also again in Latin America?
Sure. We have Mr. Vincente, who heads our US business.
Hi, good evening. Yes, we have a strong presence in what we call the horseshoes, with a portfolio, a decent portfolio in the horseshoes, three nutrient vines and some cotton. And we have increased our field force in the Midwest. So this will allow us, in conjunction with our portfolio that is growing and fits into the Midwest, will allow us to continue to grow in USA. We have grown our presence there, and we have grown our market share in USA. So yes, we are growing in North America.
Thanks. And just one last one. What will be the guidance in constant currency? Are we giving out a guidance for next year?
Yeah, we would be giving a revenue guidance of between 12 to 15% and EBITDA margin improvement of about 60 to 100 basis points. And working capital, we expect to be between the range of 90 to 110 days.
Thanks a lot.
With respect to this guidance, last year was a challenging year, and you grew much better, and now we see the effect of El Nino fading out. Despite that, this 12 to 15%, do you think this is a conservative guidance, or you think there's going to be?
agriculture is dangerous business. If there is no El Nino, there's some other Nino. So you have to, no, but I think, that's a big growth for us. We've grown 10% this year, so 12 to 15% is a good number. I'm not sure the guidance from most of our global competitors is not much growth. So we will gain market share in most markets, I believe. So I think it's a good guidance. If seasons are better, then maybe better. There can always be weather and commodities and climate is such a big impact on us. So you could have a good, slightly better, slightly worse.
You are putting up significant amount of production capacities. So when do you think the impact of this production capacities will kick in terms of revenues?
I think the impact will be in the next. This is for not really much capacity for. A little bit will kick in this year, but mostly the impact will be in 17, 18.
Okay, thanks.
We had substantial capexes even last year, so those will kick in for this year.
So if we have no, okay. Maybe just we have one question there and maybe one after that, and then probably you can join us for high tea, and most of our global management is here. So you can interact with them. We'll of course be here. We'll be happy to interact. But go ahead, Girish.
Yeah, thanks for the opportunity. Girish from Morgan Stanley. Just wanted your thoughts around return on capital employed over the next couple of years, especially when we merge Advanta as well. And any thoughts around dividend policy would be appreciated.
See, we have continuously over the last 3 years improved our return on capital employed, and we believe that with this business model and with the merger of Advanta, we don't see much change in our I would say target for return on working capital. We believe this business model can help us to deliver anywhere between 23 to 25% return on capital employed over the next 3 to 5 years.
And the dividend policy, we've increased our payout, I think, in the last two years, and I think the board is quite keen to continue that strategy.
One last question, yep.
Yeah, hi. This is Chirag here. So this industry seems to be consolidating, large players, merging amongst themselves. How does this change UPL's positioning, both in terms of the opportunities of products, that they may have to divest? One, if you can share any specifics there. And secondly, in terms of the competitive intensity of this industry, how do you think this will behave over the next 3-5 years?
I think short term, it's a fantastic opportunity because we feel that there is a lot of distraction in these mega mergers. So short term, we believe that over the next 2-3 years, we'll have an opportunity to get good talent, get good market share, because these guys will go through the normal process of integration. Competitive intensity, I don't see that as much of an issue. We believe that UPL is well positioned to be very, very competitive. And we believe that our margins in most segments is better than others. I don't think that that should be much of an issue. So at least in the next 36 months, I don't see much issue. I think this is a big distraction for the companies when they're going through the integration. So, and even big companies, even medium-sized companies there's a lot of M&A going on. So,
will there be divestment opportunities where we can?
Yes, we've good question. I mean, we have the global footprint we want. There will be some synergistic products which may be available, and we will look at them selectively. we always look at all the opportunities available, and then if it fits our portfolio strategy, we do acquire products as we have done in the past. But that's not something which we are betting on for our growth. Our growth strategy is independent of that. If we buy something, then we'll obviously add on that to the growth, but it's not something which we are running after. If something exciting comes and we believe that we can create higher value than what we are buying, we will look at buying it, otherwise we won't.
Thank you so much, sir. If I can squeeze one question on the India business, if you can give us some context of the, the contribution from patented products or exclusive products, or where we have some sort of exclusivity in the overall context of this 2,500 crore business. How big is this, specialty or patented or exclusivity kind of products?
Thank you.
1 month in advance, so you can still answer India.
I think India, as Sagar indicated in the slide, India is a very interesting business model whereby we have 4 channels, and each channel is addressing different segment of the market. So a high end is a UPL brands, which has a significant business coming out of the specialty as well as patented product. Let's say, just to put some number, maybe more than 1/3 or so. Another, the channel which we have is a Swal channel, which we are basically addressing a very competitive market space, right? Whereby there is a brand approach, but also we do not want to lose our core competence of remaining competitive in a hyper generic market. So that is a Swal part of it. And third is a bulk and tech, which also address a P2P business. So in totality, I would say it would be about 28-29%. Coming out of the exclusive and the patented product categories like Lancer Gold, like Ulala, like SAF, etc., etc.
Thank you so much.
Yeah, one question here.
Hello, sir. Chinu from Tata AIA. Your innovation rate we've seen has gone up drastically from 2.5% in FY14 to 5%, then 14%. What would have been the commensurate increase, say, in the R&D spend that you would have done, or in the number of people who are working in this field? And also, has this strategy benefited you significantly?
So the innovation rate is the factor of the new products and how they grow in the next 4 years. So that is how we calculate. In our definition, the new products remain for 1 + 4 years. So therefore, the highest potential of the new products, we believe, will be in the 5th year, where it reaches the maturity. So with that, we expect that we reach the peak, and then you will see that in the 6th year, that new product is taken out. That becomes the regular part of the portfolio. So you need to be ready to promote one more product to take over the peak sales of one product which will come out. So I think it's a race, it's a pipeline that we need to really continue. That's question number 1. Question number, the other part of the answer would be that what you see 15% in our part of the portfolio, I think the contribution from Latin America part is much higher than the other regions. So then it will happen that after 2 years, the contribution from the other region also will strengthen. So therefore, this continuity will be there. And so it has been our investment. Our investment in Brazil has been high. Latin America has been high. We will catch up with Asia. We are catching up significantly in India. So I think this process continues. And without investment, you don't see the innovation anyhow. So that's the continuity. Now, in terms of the infrastructure, also we mentioned that for the synthesis, formulation development, we don't do this work only in India. We very much believe that the innovation, it needs to be in the proximity of the marketplace where the product will be applied. To understand how the product is applied, how it's treated, to be very closer to the proximity of the market. So we have in India, we have quite a number of resources in Europe, we have in the US and in Latin America. So these are, let's say, diversification of the R&D facilities and the investment which has happened in the last 3-4 years.
Do you give any number to your R&D spend as a % sales or absolute?
Yeah. So if we do not include the regulatory part, because that is capitalized, so I think about 2 to 2.5%.
Thank you.
So thank you very much, ladies and gentlemen, for joining us for the Capital Market Day. Please join us for high tea and some light snacks. Our entire management team as well as the panel will be present for the. Thank you.